One of the hard parts about being a dividend focused YouTuber is trying to appeal to the many different kinds of dividend investors out there. Well, in my attempt to do just that, welcome back to the Power 5 Stocks of the Week. In this series, each week I present you all with the top performers in the following categories: dividend yield, dividend streak, dividend growth rates, 10-year returns, and the stock trading the highest percentage off of their 52-week high. All of these stocks will have an ex-dividend date of next week, and the only requirements for consideration to be on this list is that you have to beat the S&P 500 over the past 10 years and have a dividend streak of at least 5 years. If you're looking for a fresh take on a top 5 series, make sure you tune in each week. But now let's go ahead and dive into this week's list.
I'm excited, you're excited.
If you're a fan of higher dividend yields, this stock will be for you. This week's stock with the highest dividend yield is NiSource, stock ticker NI. NiSource is a quarterly payer in the utility sector, paying $1 per share per year with a forward dividend yield of 3.59%. NiSource has been paying and growing their dividend over the last 7 years. They have a 3-year dividend growth rate of 5.65%, a 5-year dividend growth rate of 5.82%, and a payout ratio of 59.97%. NiSource has an ex-dividend date of April 27th with a payout date of May 19th. And a $10,000 investment into NiSource 10 years ago while only reinvesting dividends since then would have turned into $31,561.26, which is a 12.18% year-over-year return rate, and that would have turned into the exact same $31,561.26 over the past 10 years if you invested in the S&P 500, which I don't know has ever happened before on this series. If you're the type of investor that loves long dividend streaks and a stock that constantly raises their dividend at a breakneck pace, you're gonna love this week's stock. This week's stock that does both of those things is Lowe's, stock ticker LOW. Lowe's is a quarterly payer in the consumer discretionary sector, paying $4.20 per share per year with a forward dividend yield of 2.08%. Lowe's has been paying and growing their dividend over the last 61 years. They have a 3-year dividend growth rate of 22.86%, a 5-year dividend growth rate of 20.12%, and a very low payout ratio of just 28.22%. Lowe's has an ex-dividend date of April 25th and a payout date of May 10th, and $10,000 into Lowe's 10 years ago while only reinvesting dividends since then would have turned into $63,272.06, which is a 20.26% year-over-year return rate, and that's again with the S&P 500 turning into that $31,561.26, which is a difference of $31,710.80 over the last 10 years. So Lowe's just more than doubled up the S&P 500 over the past 10 years, and it's still not even the best performer over the past 10 years.
You're kidding. Nope.
Before we get to that one, please drop a like on the video as it helps other dividend investors find the channel, and then make sure you guys are subscribed with the bell rung to get notifications every time I post new dividend related content. Lastly, use that comment section down below to let me know which of these categories in the Power 5 is your favorite and why. But now let's get to these final 2 stocks. So the stock from this week's list with the best 10-year returns is West Pharmaceutical Services, stock ticker WST. WST is a quarterly payer in the healthcare sector, paying 76 cents per share per year with a forward dividend yield of 0.21%. WST has been paying and growing their dividend over the last 30 years. They have a 3-year dividend growth rate of 6.08%, a 5-year dividend growth rate of 6.51%, and a very, very low payout ratio of 8.99%. WST has an ex-dividend date of April 25th with a payout date of May 3rd. And here's where this one really shines. A $10,000 investment into WST 10 years ago while only reinvesting dividends since then would have turned into $121,044.07, which is a 28.32% year-over-year return rate, and that's again compared to the S&P that turned into that $31,561.26, which is a ridiculous difference of $89,482.81 on just your 10K just 10 years ago. If you're the type of investor that loves the thrill of the deal, this stock might be for you. This week's stock trading the highest percentage off of their 52-week high is Hingham Institution for Savings, stock ticker HIFS. HIFS is a quarterly payer in the financial sector, paying $2.52 per share per year with a forward dividend yield of 1.18%. Hingham has been paying and growing their dividend over the last 15 years. They have a 3-year dividend growth rate of 14.96%. A 5-year dividend growth rate of 12.71%, and I was not able to find a payout ratio for this one on the multiple websites I checked. At the time of recording, HIFS was trading 38.26% off of their 52-week high. Hingham has an ex-dividend date of April 28th and a payout date of May 10th, and a $10,000 investment in HIFS 10 years ago while only reinvesting dividends since then would have turned into $35,042.77, which is a 13.36% year-over-year return rate, again compared to the S&P turning to that $31,561.26, which is a difference of $3,481.51 over the past 10 years. As mentioned in the video, each of these stocks has beaten the market over the past 10 years, has a dividend streak of at least 7 years, and all of these stocks go ex-dividend next week if you choose to make the purchase. Let me know in the comments down below if any of these stocks piqued your interest and what it was about that stock that got you excited. And if you happen to miss it, I just released a video that outlines the best and worst stocks from the CCC list over the past decade. If you missed that, check it out right here. But until next time, see you.